My name is Ryan Calkins with NRL Mortgage, and this is an overview of my Smart Start Handbook. So this is a buyer's guide to educate buyers as far as what to expect moving forward, who to contact for what documentation to expect, and an overview of my close on time guarantee. So to start off, we'll go into the second page, which has the contact info for me and my team and who to contact for what. You'll contact me directly for all applications and pre-approvals. Once you get into process, you will be going to Brianna. Now, depending on volume, you may have a different processor, but you have direct access to our processor throughout the entire transaction, and that puts you one person away from the underwriter at any given time. It's really where we get our turn times down to a minimum. The process flow here is a flow chart that outlines exactly what to expect moving forward as far as timeline goes in your transaction. To start off, you'll contact me. We'll go over any questions you might have before getting started, and then from there is the online application. It'll ask you all the right questions. You won't have to dig for any sort of information. You should know most of the details off the top of your head. It will typically ask for paycheck stubs and bank statements, but if you have any questions on anything, you could always reach out to me and I can help you fill in those blanks together. For applications that have a little gray area in the pre-approval and we want more feedback, we do have an opportunity to submit that file to underwriting prior to getting into contract. Meaning once you do get into contract, you'll have one pass-through underwriting already, and about 50% of the work in that transaction is already done as far as the feedback we need to fully approve your loan. Once you get into contract, you'll be sent over to processing. Now, the processor will handle all documentation from contract to close. Again, you'll have direct access to her, and that puts you one person away from the underwriter, and it's really where we get our turn times down to a minimum. She will send you your initial needs list, which is everything we need in order to get into underwriting for that first conditional approval if we don't have it already, depending on how much we collected during pre-approval. But at that point, she would send you a list. You contact directly with her, whether you upload those documentations in the portal or email her directly. However that works, we'll accommodate the best we can. Once we get that first conditional approval, if we didn't already do that at pre-approval, that basically says the underwriter will approve this loan pending the following conditions. It could be anything from documentation to a letter of explanation, asking questions on the documentation you've already provided, but we will outline exactly what we need in order for the next submission to submit you for a clear to close. And that clear to close, also known as a full approval. Once we have that, we can send our closing documents out to the title company. That takes a few hours for the closing department and the title company to send those documents back and forth until their numbers match. But once that happens, we've got a final settlement statement, and at that point, we are able to close. Pre-qualified and pre-approved. So the difference with the pre-qualification and a pre-approval is the pre-qualification is just your application. It's the accurate details you put on there. We verified credit, but we haven't verified any documentation like paycheck stubs, bank statements, tax returns, anything like that. So your pre-approval is actually your application and then us verifying that we make enough money a month in order to qualify for what you're wanting to purchase, as well as the funds to close to make sure that we verify where those funds are coming from and know exactly how to document that file. Other than that, it's pulling credit and understanding what your credit profile is and anything there that we may need to troubleshoot or just verify in general. But that's going to be the main difference between a pre-qualification and a pre-approval. Of course, you do need a pre-approval in order to go out and look at homes. The close on time guarantee is something I put together in 2011 in a time when mortgages to close with less than 30, 45 days was really tough after they changed a lot of laws and everything after the mortgage bubble. But what I came up with is if I could organize and educate my clients enough to not just leave the ball in our court at all times. Of course, it's our job to close you accurately and on time and keep you informed, but you're very much a part of this team. So at the end of the day, your file is basically just a stack of paperwork that you provide us that we verify. So on day one, when those disclosures go out, this timeline starts. And then once the processor gives you their initial needs lists, try to get the documentation to us within about 24 to 48 hours. Best rule of thumb is whenever something's requested from you, try to get it back to us as soon as possible, and then it gives us an opportunity to manage everybody else in the transaction. There's 20 to 30 different people and companies involved in every transaction, from appraisers to home inspectors, underwriters, title company. They all have a certain part they have to play. And for better or worse, your loan officer is the scheduler for your transaction once you get into contract. So our goal is to make sure that we close quick, we keep everybody educated as far as what comes next and what we need. And as long as you can follow this timeline, which is within 24, 48 hours of request, getting the documentation back to us, then I'll put a $500 guarantee towards it, meaning that if any of our internal resources like closing, funding, processing, underwriting, anything on my end as far as NRL delays the transaction, then I'll back it up with a $500 guarantee. Now, it doesn't cover everything. This is for existing homes only. Refinances take a little bit longer. This is for FHA, VA, and conventional loans only. Down payment assistance programs, there's a little bit more that goes into them. They do take a little bit longer, but not much. Typically, those will still close within 30 days. It doesn't cover any delays such as verification of employment, verification of deposits, rent, verification of mortgage. Any sort of documentation that we need to verify on your end that we get delays on will void the guarantee. This is for purchase transactions only, no down payment assistance. It doesn't cover issues with third-party documentation such as title policy, homeowners insurance, appraisal, condo documentation like condo questionnaires, and this does exclude business holidays. But all in all, if you can follow the timeline and get the documentation into us and leave the ball in our court, we can manage the transaction a lot better and close you as quickly as possible with the least amount of headache. Common supporting documentation in a loan transaction. So everything is going to fit into 4 different buckets. We have income, assets, credit and liabilities, and then subject property. So common income paperwork would be tax returns, business tax returns if you're self-employed, W-2s, paycheck stubs. We'll need a full 30 days worth of paycheck stubs. So if you're paid bi-weekly, that would be 2. And any sort of income that you get from, let's say, Social Security or disability or pensions. But those are the things you would kind of keep an eye out for as far as just verifying income up front. Assets for the cash to close. Typically get 2 months worth of bank statements, whether it's checking, savings, CD, money market account, retirement account. If it's gift funds from a family member that we're factoring in, this is when we would identify that. And it gives us an idea as far as how to structure the loan and what documentation to ask you for. So it keeps us from having to go back and forth, making sure that all of our details are accurate up front. Credit and liabilities, of course, we are going to pull credit. We do have to add in all of the debt, monthly debt that you have on your credit report. And if you own any other properties, we'll need a copy of that mortgage statement along with verifying the taxes and insurance and maybe any HOA that you might have. But credit and liabilities is really just factoring into your debt to income. What is our debt to income and how much of a home can we qualify you for to where we fit in those metrics and are able to get you pre-approved without any issues. The property itself, that documentation consists of homeowners insurance, appraisal, home inspection, land survey, copy of the earnest money check. But any documentation we ask for at any time during the transaction will fit into one of these 4 buckets. So it's something to keep in mind. Just know that some people struggle with the amount of documentation we need. Just know that it is not really up to us as your lender. We submit your pre-approval to Fannie Mae through an automated underwriting system. And from there, it literally gives us a checklist of all the documentation we need in order to approve your loan and make it eligible for programs such as VA, FHA, and conventional financing. So some do's and don'ts during the mortgage transaction. First off, continue making all of your mortgage and rent payments. Continue to make all your payments on your credit cards. Continue to live at your current residence. Be proactive with all supporting documents. Again, try to get everything back to us within 24 to 48 hours. And as always, call me or our processor if you have any questions. The don'ts, there's a few don'ts. I mean, the goal really is to keep your financial profile exactly the same as it was whenever we pre-approved you. That means don't go refinance your car, don't go pulling credit to take out any new lines of debt. Don't transfer any balances from one account to the other without talking to us first. Don't start shopping for appliances and putting anything on credit just yet. Try to wait until after you close. Don't consolidate your credit cards. Don't refinance your car. Don't finance any elective medical procedures. Long story short, we want to make sure that your credit profile is the same from whenever we start at pre-approval through your closing date. Once you close, you can go back to living life as normal. There's no more restrictions at that point. You've got the keys, you've got your home. The goal with the Smart Start Handbook is to educate you as much as we can to make sure that you have the most convenient process possible on a somewhat inconvenient transaction, but it's my goal to make that as easy for you as possible. So if you have any questions at all during the transaction, feel free to reach out to me personally, whether on my cell phone or the processor, and I look forward to helping you with the purchase of your new home.